30% down for a mortgage. Would you do that? What would it mean for investors in particular if banks are now requiring that and the real estate market as a whole is having a tough time? We'll ask super broker Dolly Lenz. Dolly is laying down the worst case scenario. She says the solution is no longer location, location, location. It's jobs, jobs, jobs. By the way, she rang in the new year by selling a $15 million home in New York City New Year's Eve. We've got Dolly, and we've got the photo of that place in a Fox Business exclusive. Looking to be a homeowner in 2011? We'll keep saving up because some of you could be staring down a 30% down payment on a mortgage. Peter Barnes is in Washington with the details on this story. Peter, how likely is this to happen?
Well, regulators definitely have this under consideration, Liz, but they are not likely to adopt it. But they are going to adopt tougher standards for mortgages in the next few weeks that could affect whether you can get one, and if you can, how much you will have to put down, what the interest rate will be, what the closing costs will be, what your monthly payment will be. All of this part of financial regulation reform. Basically, Congress asked regulators to define what a safe mortgage is to try to prevent a future housing crisis and bank bailouts. 20% down has been the historic standard for a safe traditional mortgage, but one big mortgage lender, Wells Fargo, is suggesting that that be increased to 30% for some homeowners. Wells Fargo says that this would not only create some safer mortgages, it would also help buyers who could not put down 30% by allowing banks to more easily create and price safe mortgages with smaller down payments. For example, loans with private mortgage insurance for people with high credit scores and good jobs, but not a lot of savings. Now, consumer groups, realtors, mortgage bankers, and community banks opposed the 30% down payment idea from Wells, saying it could hurt sales and the housing market recovery. One government official, Liz, tells me that as a result, regulators are likely to come down somewhere in the middle between smaller down payments and Wells Fargo 30% proposal. Back to you.
Peter Barnes brings up an excellent point about all of this, and that leads to the question, well, then what about Fannie Mae and Freddie Mac only requiring 3% down? Who are these government regulators kidding? And exactly what would requiring 30% down do to the housing market? Let's find out from someone who's on the ground traversing this industry in a Fox Business exclusive. Dolly Lenz, vice chairman of New York's largest real estate company, Prudential Douglas Elliman. This is just a whiff of this idea from Wells Fargo, but could this be a reality of 30% down required?
I mean, I can't even imagine that it would be across the board 30% down payment required. It would destroy the real estate business. You know, people are having a hard enough time coming up across the country with a 20% down payment that's now the average to come up with 50% more or 30%.
Shouldn't they, though, have the money to buy a house if they're going to own a house? We saw so many problems. I mean, it's insulting that people, oh, yeah, I buy this house, and then they're foreclosing and sticking it to the banks?
No, I agree that it should be back to basics. And 15 years ago, it was 20, 30% down, and it should be back to basics, but it should be looked at individually. Some people really can afford not to put 30% down, and those people should also be looked at favorably.
Mm-hmm. What about Fannie and Freddie? The government is still back to really what could be potentially negative ways of only requiring 3% down. Aren't we going back to the go-go era of 2005?
You know, they're only doing that in extreme cases with very high credit scores, very good employment records. But still, yeah, I mean, I think we do have to be cautious because caution will be the word of 2011.
Caution. Now, let's look at the entire picture here. In New York City, for example, sales are up 14%. That certainly helps. I'm sorry, is that correct?
Prices.
Sorry, prices are up 14.3%.
Correct.
But how are sales doing?
No, sales are still lousy. I mean, there's really very little sales volume. Absorption is bad. So it's not any euphoria here. It's just better. You know, we escaped the horrors, but it's still not wonderful.
There wasn't any horror for Dolly, by the way, on New Year's Eve when she got a call that somebody wanted to go to contract on a $15 million apartment?
Yeah, asking 14.5. We went to contract on New Year's Eve, and, you know, they flew in from Brazil.
There you are.
The contract.
Is that the new profile of the wealthy real estate buyer?
Central American, South American, that seems to be what's reigning over the last month, and I project for this year.
Wait, were you at a party and you got this call? How did this come down?
No partying.
I know. You're a killer in the business. You'll work at any hour. So this person put down that, what was their down payment?
All cash.
$15 million, all cash. Let's talk about some of the other properties in New York. And of course, folks, we want to keep in mind that these are very high-end properties. But how is the selling? Because sometimes that's a more bullish indicator. You've got one in Tribeca and one in Central Park West.
Well, the Central Park West one is about to go to contract, and the Tribeca one is about to go to contract as well. So I guess the market is healthy, just not great. There's not a lot of depth.
Where do you see mortgage rates going in 2011? 30-year fixed, for example.
I mean, I could see them going all the way up to 6, and I think that would still be okay for the market. Remember, we had a very healthy market with an 8, 9, and plus% mortgage rate. So it's really not about that. It's about jobs, jobs, jobs. So the mortgage rates we can withstand if we're employed.
Okay, so what about, say, jumbo rates?
Well, jumbo rates really vary all over the place as well, because those are generally private bank rates. So the private banks set them depending on other factors.
Where are your clients getting the best mortgages right now? There is anecdotal evidence that banks are awfully reticent and awfully resistant to giving people mortgages right now because they've been burned.
They still are, but there are really good people out there. I mean, there's a guy named Keith Kantrowitz at Power Express who's amazing. Does almost all my loans besides the private bank loans, and he's a Fannie and Freddie direct writer. And there are people out there. You have to do your research. You have to find honest people, but there are great people.
And then there's, of course, the sort of personal relationship with bankers. I don't have personal relationships with bankers, but is that really what it's come to now?
Oh,
you got to know somebody?
Oh, without a question. You'll get the best rates. You'll get insight. You'll maybe be able to structure something where you put some money into an investment vehicle to back up the mortgage.
Will the housing market bottom out this year?
Across the country? No, I don't think so.
Not yet.
No. There's three to 5 years of shadow inventory, so it can't.
Shadow inventory, of course, is the sort of stuff that's on the bank's books, foreclosures.
But not listed.
Well,
right.
Are they going to start dumping this stuff out on the open market?
They can't, because then they would have to write it down, and they don't want to write it down. Right. So they can't.
Dolly Lentz selling a $15 million home on New Year's Eve while the rest of us were wearing hats and partying like idiots. She's making the money. Love it. Thank you.
Thank you.
Good to see you. Closing bell ringing in about 17 minutes.